touched on the dividend. Interim dividend
Yeah.
was unchanged.
Yeah.
What I found following you guys these years is that people suddenly were surprised and taken aback by the amount of leverage that went on the balance sheet that was buying Serengeti.
Yeah.
You know, these guys, shareholders, had been with you for 30 years.
Yeah.
They'd never seen you borrow a dollar. I saw borrowings went up 5.5 billion. Can we just touch on that? I mean, how are we doing, Charles? Are you comfortable with the debt, the rate you're paying on the debt load, where the debt load is? What's the story?
Look, I'm going to ask you to have an in-depth session with Tracy Barnes. She'll talk through all of that with you. But the headlines for me are that I think we went from a lazy balance sheet where we were completely under-leveraged to putting too much stress into it.
Yes.
We've been working to get that back into good shape. We're a highly cash-generative business, and we can attend to those things. And we've been doing some things, like we launched a commercial paper program, which was, I think, the biggest ever in East Africa, or one of the biggest ever. We've got some more work that's going to be happening in the next 2 to 3 weeks, actually, which will be another kind of expression of the balance sheet work that we're doing. In terms of the coupon that we're paying on our debt, I was looking at the bond market yesterday. The coupons are quite big,
aren't they? When the whole world's gone negative.
Yeah, I know.
Denmark, you take out a mortgage, they'll pay you
13-14%.
I know.
I'm thinking about taking mortgages out for my kids. Anyway, so I kind of look at those interest rates, and I look at the interest rate that we're paying on our intercompany and other debts, and relative to the market, we're in a decent space.
Yeah.
Our intercompany debts are made on an arm's length basis, because you've got to respect the shareholders at both ends.
Is it about the 20 billion size, or
something like that? Yeah, and I think over time we might look to kind of rebalance our debt profile, so we've not got as much with one lender, and we kind of, but it's quite a friendly lender actually. So
it's the edge.
Yeah, so it makes sense from a number of perspectives, and we'll continue to look at our the totality of our business, so that it's structured in a way that our shareholders are really pleased with the way that we're managing our business and what we're doing. Coming back onto the dividend, if we keep growing the way that we have in terms of PAT, I think there will be an argument for changing the dividend at the end of the financial year. I think there's also an argument for not changing it in terms of conserving some cash, and maybe having a period where you've got dividend payout stability rather than dividend payout growth. It's not a decision we've taken yet, but I think when you've got growth, you've got options, right?
Yes.
And we'll look at it, and we'll make a recommendation to the board what we think is the best thing.
And I think that you're seeing a good perperformance in the share price this year. It's strong.
Yeah, so look,
a lot of momentum building up.
You're wise, right? Your commentary has been spot on. I've kind of been reading your commentary, and I think as you got initiatives globally like quantitative easing and very low interest rates, if overseas investors are confident in the currency environment, then they can access 30-year money for 1 or 2%, 150 basis points, or whatever it might be. It makes a lot of sense to invest in this region with the growth profile that we should have. One of the things that investors tell me that they like about EABL is the fact that we've been here for a while, that we've got established brands, that we've got compliance and ethics principles which are well entrenched.
You're a go-to stock. Anyone coming to the stock exchange is coming to you, or Safaricom first.
So I think we've got a lot to offer investors, and and we're trying to kind of repay that faith in us by managing the business well and generating returns which are in line with the ones that we announced yesterday, and hopefully we'll get better.
last point you made in that media briefing.
Yeah.
You see, I paid attention all the way
Yeah.
through. You said, look, the business is, I think you used a different phrase, but I remembered it as firing on all cylinders. Growth, you said you could feel the growth coming through. That was quite a bullish statement you made there, Charles. Shall we end up by saying you're a bull?
Should you end up by saying I'm a bull? I'm not quite
Because,
sure
you
I
know,
quite like that language, but
Yes. Well, I think bullish about you're in a better place now than when that you feel confident. It seemed to me, reading you in that room, was that you're confident about where it is. Lots of growth, growth wind in your sails now.
look, you're an expert at looking at businesses around the world and determining whether they're kind of good investment destinations or not, right? And I guess that when you look at businesses, you look at the balance sheet and the P&L and the past performance, but you also look at the way the businesses are set up from a management perspective, the core competencies and strategic assets that they've got. You think about the brand profile that they've got, the consumer profile that they've got. I kind of look at our business in similar terms, and when I'm looking at that, I think that destiny is in our hands.
Yes.
Yeah. So the future performance of EABL will be built on how we operate, and I think we're in a great part of the world. We've got fantastic growth levels from a GDP perspective, from consumer demographics perspective. We've got great kind of population kind of growth, and we've been here for 92 years. We've got the production assets that we've got the brands that we've got. I think we're set up to be successful. The key for me and the executive team and the rest of the EABL staff is to kind of respect that opportunity by taking full value out of it. And again, I think that over the years, sometimes we've not been progressive and aggressive enough. And what we're trying to bring into the business now is a kind of real desire to win and to perform. So the cultural shift we were talking about, the ownership mentality, we're trying to bring that into work every single day. And I hope that the next time we're talking about performance, it'll be another set of good numbers it's the next wave of
my theory,
development.
I think we're going to get a big stimulus. So I'm interested to see how your second half turns out and whether you're a proxy indicator of.
So look, I think common sense would lead you to a position that where you've got a huge kind of discontinuity in the cost of living in a nation, which is kind of oil price, right? That should flow through into short-term consumer behaviour. Should do, right?
Yes.
Let me give you an example. I spoke to somebody recently who said, I filled up my car with petrol.
Yes.
And it cost me kind of 20% less than it had 3 months ago. I thought, I'm going to have a beer. Genuine conversation.
Yes.
Genuine conversation. And I think that people will really feel better off.
Yes, so do I.
And I think that it will have an effect of boosting the economy, definitely. I'm not seeing it yet.
Yes.
I'm seeing some of the benefit from a cost perspective, we're quite
you must be quite a big consumer of energy.
So heavy fuel oil for us, I think, is something like 7 million litres a year, or I might have got the number wrong, but we're quite a consumer of heavy fuel oil, both in the brewery and in our manufacturing plant. And obviously we drive a lot of products around the country, which incurs kind of logistics costs. So we're seeing some easing in our cost base. I'm not yet seeing consumer response, or I'm not yet seeing an uptick in the markets, but I'm confident it'll come. I think it will come.
I think it will too. Charles, Ireland, thank you so much.
And
congratulations.
Thank you.